What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is May 12th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I've got to go on a bit of a rant and rave and give you guys what I feel is a brutally honest take on the current state of both Bitcoin, altcoins, and the broader crypto space as a whole. I need to spend some time to talk about why I believe that over the past few months, we've been engaging in one of the biggest relief rallies, or more specifically, what I like to call liquidity traps that play out from time to time in both traditional markets and crypto markets, as it's clear and evident now by what we've been seeing over the past couple of months. I'm going to tell you guys how we feel confident in this position, and on top of that, how you can start to prepare considering where price action could really go for Bitcoin and a whole range of other assets. We've got a lot to talk about in today's video. If you guys happen to enjoy the rambling, consider dropping a like. It's one of the greatest ways you can support the channel, and let's go ahead and kick off the rambling. All right, so I want to go ahead here and start with Bitcoin, because as we go throughout this, we're going to talk about Bitcoin, altcoins, we're going to talk about a ton of different metrics here, and there's one really critical chart that I want you guys to see later on that can really help serve as a guide to spot buy the dip opportunities in periods where markets are overbought. So we'll talk about that as we go throughout the video, but I want to go ahead and start with the fundamentals here. Bitcoin itself, no matter where you stand, whether you're in the camp of people like us who believe that we're still in the midst of a bear market, that we could easily revisit down to the previous lows or a much lower range from where we are now, or for those of you who believe we're in a new bull market, putting aside our differences here, we need to talk about momentum. Momentum indicators can be a really great middle ground to really see who is in charge here in the short term. And quite frankly, on the daily time frame, yet again, for the first time since back in early March to late February, the bears are finally taking back control to a large extent. We have not made new highs here for nearly a month since back on April 14th. And once more, if we're just analyzing price action alone, we're at our lowest point since back on March 17th. Nearly 2 months of stagnation in the trend. And I understand the number doesn't always go up and to the right constantly, and there's going to be periods where things stall or maybe have a slight pullback. But I got to be honest with you guys, this is really not good for Bitcoin's price to have hung up in this range, had multiple attempts at breakouts, but each and every time having it fade. Our momentum indicator we utilize within the Dash report has been signaling multiple red flips, inconsistencies in the trend, and one of our key partner tools, LuxAlgo, which is one of my other favorite indicator suites that I personally utilize in my trading strategies, here in the daily time frame, we have price into the green pocket, meaning that either in the short term, we've got to see some love for price, we got to see bulls coming back in, driving up prices higher, or if we snap through that green band here, it's oscillating around price, that is going to be your telltale sign. If we snap through there, that we're likely moving lower. All right. So again, we can generally see here that all the momentum indicators are not pointing in favor of the bulls here in the short term. But to be completely fair, we have yet to see that full flip here on the weekly time frame. It is still blue here. The bulls have been maintaining that control since back here during the breakout in January. That has continued to creep up slowly but steadily. But a lot of the gains are coming in these short windows of time. And the vast majority of the time elsewhere is showing stagnation in the trend. The question is, can we continue that momentum to the upside as we've been holding sideways for so long, and as we're revisiting towards a incredibly significant range of previous support in the past that has acted as resistance since back here in May of 2022. Nearly a year's worth of price action where we have not been able to really reclaim and hold above that $30,000 level for a sustained period of time, proving it as a new support. That is what we really wanted to see here as we got above the 200-day and 200-week. The price action has now started to stall, and we need to ask ourselves a genuine question. As price is pulling back here, are we going to be able to find support on these moving averages? And I think this brings us towards a more fundamental question. Are we really ready for another bull market? I know a lot of people chased a ton of narratives over the past couple months. A lot of people applied so many theses, like these different theses, to buying Bitcoin or altcoins and why we're in a new bull market. You know, some pointed out towards the balance sheet expansion in the United States or in Asian economies. People pointed out towards the bank runs that were going on at Silicon Valley Bank and Silvergate and, you know, all types of different narratives. But none of them really stuck true. We already dispelled so many of these over the past couple of months here on the channel. We've pointed out that the United States Central Bank balance sheet has continued contracting here as the Fed is still on autopilot, increasing interest rates and reducing its balance sheet. We pointed out the fact that dollar liquidity in the crypto space has remained flat after a significant decline since back nearly a year ago. We've been in a downtrend, broadly speaking, for the last year in stablecoin liquidity. And I understand some people will say, oh, Nick, people are just buying directly through the exchange. It doesn't matter. If you look back throughout history, during the kickoff of the previous bull market, we can see very clearly that an increase in stablecoin liquidity, even when Bitcoin was the only real horse in the race and altcoins were still relatively lagging behind and losing dominance, there was still an expansion in stablecoin liquidity. It is the biggest indicator of on-ramps of new liquidity from hedge funds, family funds across the world, a lot of the high net worth individuals that are going to actually provide liquidity to drive crypto markets and kick off new bull markets. So we have not seen that. We're seeing a contraction not only in stablecoin liquidity when we're taking a look at the microsphere of crypto, but in global liquidity as well. It's no surprise why we're seeing this. We're seeing more people moving out of the industry, whether it be developers, investors, market participants, rather than new entries coming in. It feels like things are relatively stagnant. And if things are stagnant like this and there isn't new momentum coming in, then what's going to lead a new bull market? You can't have a new bull market if there's not an entrance of new liquidity. You can have relief rallies, some short moves, but nothing's going to take you back to that point, especially if liquidity is stagnant or contracting for that matter. It's going to take you to new all-time highs. And that's the question we have been trying to answer here on this channel for a long period of time. And we have been quite brutal and honest in our opinion here, guys, because I know there are a lot of content creators who will tell you it'll go maybe up, maybe down, might do this, might do that. We believe that this is a clear relief rally. And it is important to consider not only the setbacks that are currently within the crypto space, the damage that was caused by FTX, by Celsius, by BlockFi, by the range of exchanges and participants in the space who just completely fell under it. The institutional backbones of Genesis, of Silvergate, of Signature Bank, the huge crypto banking entities that provided institutional grade capital and on and off ramps for large scale crypto companies. They're now gone. This is squeezing potential liquidity on ramps into the space and therefore off ramps, getting people to be even more wary about not only getting capital in the space, but worrying about it being stuck in the crypto space as a whole. This is a big reason why we've seen dollar liquidity stagnate in the crypto space over the past couple of months. And it is going to probably hold there for a long period of time, considering the current status of a lot of crypto banks. And this is, again, a key thing we need to understand here overall in the crypto space. And it's not just me bashing on Bitcoin. Bitcoin is the strongest player in the market right now. Right? Bitcoin has been holding up relatively well. And we're starting to see Bitcoin itself showing weakness, but it's not just Bitcoin. Taking a look at the coins that many people thought would outpace Bitcoin in this environment, when we've pointed out that altcoins only outpace Bitcoin during very short windows of time throughout history, we can see very clearly that Ethereum here has already gotten the trend flip, not just on our key momentum indicator, but also on the Lux Algo momentum indicator as well. It snapped just the other day on May 10th, and it signals a clear sign that we are likely ready for more downside, albeit we have had a few anomalies like the period back here in March. And we're gonna have to see whether or not the bulls will come surging in during that period of time, if we're going to have more bank collapses, and if that's really going to hold true and drive Bitcoin or Ethereum or crypto assets higher. We'll have to see. But I have to tell you guys, all these kind of fear-driven narratives that have been convincing people to FOMO in are nowhere near as fundamental or as exciting or as bullish or euphoric as actually having real use cases that are seeing adoption in crypto. It's as if we've just thought, number goes up because we want it to and we think it's great. But are there new market participants that are going to come in with serious liquidity in a risk-off environment and buy up crypto assets? It's just an honest question we have to ask ourselves. And while a lot of people are telling you absolutely everything's going up because it's so great, I'm here to tell you guys the counter opinion. I'm here to be a little bit more, I think, realistic and try to be honest and genuine about the current state of the market. There is not much development going on right now. Nowhere near what we need for another bull market. I was there during the last bear market in 2018 and 2019. And I can tell you guys, there was DeFi, NFTs were making a resurgence. There was a whole lot of fundamental things that actually justify new liquidity coming in. And outside of AI as a narrative, which really doesn't hold much relevance in the crypto space, I know there are a bunch of AI tokens out there. Put aside that narrative because it really doesn't have to do with blockchain. Maybe you've got, GameFi or some other small things. At the end of the day, there's some good projects in these different industries, and same in DeFi, but the valuations do not match the traction when liquidity is being removed from DeFi protocols. And another thing, if you guys just again think I'm just bashing Bitcoin or Ethereum, take a look at the whole market here, guys. We just talked back on, I think it was on Monday, about the state of the altcoin market here. And I think since then, we can see that Optimism, for example, one of the big layer 2 scaling solutions, down from $1.90 down to $1.53. Arbitrum, right, back the other day at around $1.20 after from a previous high of around $1.80 down towards $1. If you guys got caught buying a lot of these plays up here, chasing the FOMO, you could already be down 30, 40, 50, 60, 70% on some of these plays. It's just the problem is that so many people chase into that euphoria. Take a look at Matic here, down nearly 50% since its highs back in February. And this was one of the giveaway signs here that we weren't in a new bull market. That essentially, this is a game where market makers on thin liquidity drive up the order book. Then where the euphoria wasn't there, where it was easy to drive up prices, then they basically just slowly but steadily distribute or sell positions at a very slow rate, not to disturb price too much, where buyers are still euphoric and optimistic and FOMOing into the higher prices, allowing them to sell at a much higher price range. And if PEPE wasn't the sign here for you guys, I have to be honest, I don't know what is. I know some people were even going as far to say that this is a great sign of a new bull market starting. Really? We've been covering crypto here on this channel for 6 years, guys. And if the only thing that is getting people excited in this period of time is a meme coin, which has been dumping here over the past couple of days, in case you caught it in the late phases, down nearly 2/3 from its previous highs. I mean, this is just abysmal for the industry, guys. What do you think, for the few people that are actually building here? I had a really good chat with one of the partner projects I work with, a good friend of mine, Alex, in the space, and he's the creator of Angel Block. So he's trying to really do good stuff. He's trying to actually bring capital raising for quality projects, set good quality filters for people trying to build. He talks to a lot of different teams and projects that are really smart people trying to fix complex issues, people who would totally break the narrative of what I just said that no one's building in this space. There are some good quality people who are trying to build. But what do you think they feel when they've been working for the past couple years to deliver something and their token price is relatively stagnant, investor sentiment is shot, no one is interested. However, PEPE token comes out of nowhere and just shoots off to the moon, right? And some people say, oh, that's just jealousy, this and that. But it's really discouraging, right? For those real fundamental use cases that could actually drive this industry to becoming a multi-trillion-dollar industry. When you see PEPE go off, I mean, how can you compete with that, right? Some meme token that was just generated, some ERC20 token that just completely balloons up towards over $1 billion to potentially $2 billion in valuation. It's really disheartening. And if that's the use case of crypto speculation, if that's what it is, and as some people say quite candidly, well, speculation does not do well in contractionary environments. That's the reality, guys. It is why we've been beating this on the table. We've been beating it like a dead horse at this point, that essentially crypto markets are not ready to move higher. Total 2, right? This is the measurement of altcoin market cap. In less than a month has already dropped 15%. And this to me just looks like an expanding channel. And if the highs have been expanding, that means that the lows are expanding. And where does it lead us right back to? Right back towards the previous lows at around a $430 billion market cap for altcoins. Right now, where we stand, we're at $560 billion. And I would not be surprised, depending on how long this takes, if we move to new lows. That has been essentially what we've been calling for here. As dollar liquidity has been contracting in stablecoins like USDT and USDC, as BUSD has been unwinding since back in November due to regulatory concerns, And as other players like Paxos, much smaller altcoins or stablecoins, have continued to remain flat, that dollar liquidity is not here. The optimism to sustain a long-term rally is not here. And it's not just my feelings, but price action that's telling us this. Now I want to show you guys one critical chart that I think will take this point home. We've talked a lot about dollar liquidity in the crypto space and how it can help us to serve as a guide for where price might head in the future. And one of the most powerful charts, this is something we would usually only share with Dash Report members, but I want to give you guys a bit of a taste of the kind of analytics that we're working with behind the scenes in order to come up with the sentiment and the positions that we build. And one of those is a chart that's tied around Bitcoin and stablecoin dominance within the market. Now, there are a couple different iterations of this, but they're generally going to give you the same results here. It's essentially focused on how much of the market is made up of stablecoin dominance, right? And there's a reason why this is very important, because if you think about it from a fundamental perspective, if you have an increase in dollar liquidity dominance in the market, this means one of two things. Either there's a big on-ramp of dollar liquidity into the market, or on the other end of the spectrum, dollar liquidity makes up the vast majority of total crypto market cap. So for example, if you have $200 billion of stablecoin liquidity between USDT or USDC and all the other players, and you have $800 billion of cryptocurrencies in the market, altcoins, Bitcoin, Ethereum, you name it, right? Then we basically have a ratio of 5. Right? Right now at the moment, we have a ratio of 4.5. So as this moves lower throughout time, where stablecoin liquidity makes up a much greater ratio of the market, right? Essentially speaking, we have discounted prices and a higher amount of liquidity per those valuations. Sometimes we would get a mix. Maybe we were getting a new on-ramp of dollar liquidity, which I don't think we're really going to see here in the near term. And on top of that, we could get cheaper valuations, just accelerating that trend to the downside, right? The lower we go on this, the more enticing it becomes to become a bull. The higher it moves, the more enticing it is to become a bear, especially in a contractionary environment like we're in now. Take a look at this chart, guys. Notice how there is a clear band of resistance and support. Let's go ahead and just take a look at these highlighted circles here. We'll also even highlight the resistance bands as well, right? Take a look here. Back in January 2019, right? During this period of time in December and January, that was the bottom of the last bear market, the one we were talking about earlier. Take a look at here, in June of 2019, right? This right here, perfect opportunity to take profits and sell. Some of you may very well remember that was the extended relief rally from the bear market up towards 14K. Take it forward here towards March 2020. I think we all know what happened back then. Perfect capitulation buying opportunity for Bitcoin when everyone was fearful that the entire industry was collapsing. Perfect time to buy it. Take a look at the resistance band here from December of 2020 to March of 2021. While Bitcoin's price definitely still made some increases from, say, the beginning of this time towards the end, roughly speaking, the majority of the move was here between September of 2020 and December of 2020. Let's keep going through the chart, guys, right? We can see here, while it didn't go into the green band here, tapping right off of it here was the bear market lows, the kind of mid-cycle lows back in June and July of 2021, leading towards another 100% move back up towards those highs where we had the top within the bear market, setting in slightly higher levels than what we had back here. Now you'll notice over time that as we progress, we need more and more dollar liquidity making up this market. Why is that? Well, there's two reasons for it. One, as Bitcoin expands in market capitalization, it gets increasingly difficult for an asset to justify valuations without the dollar liquidity to match it. And once more, we've also got a whole range of altcoins in the market, right? But I digress on this. You guys can see it very clearly on the chart here. It's indisputable as we come down here towards a much cheaper range from a liquidity ratio of 12.5 down to 2.7. That's when the bulls came in. That's when it was time to buy during the capitulation. Back in June was a prime time to buy Bitcoin, even considering the collapse in FTX. Right, we came back down to the lows there, but then we started to reverse higher towards a liquidity ratio of up to 5.3. And now we are seeing stagnation in the channel of previous resistance. I gotta tell you guys, I think that we're heading for some serious storms here over the next couple of weeks and the next couple of months. And if a lot of people out there, there's still a lot of investors who think we sound completely crazy here on the channel when we say that there's a chance we revisit towards those lows, I would say that it's not only likely to happen, but to be prepared for visiting new lows. Don't be surprised if we move a couple $1,000s cheaper from the prior lows and stay there for a little while. That this bear market could extend towards the close of this year, going into the fall and winter. And then eventually, during that third wave of capitulation, we had the sell-off in June, we had the FTX collapse, and now we have potentially our final bear market bottom that could come in somewhere around 10K to 12K. Once we get that low, that could be the time to seriously dollar cost average, to get really exuberant when everyone is fearful, when it feels that the entire industry has been flushed. All of the noise is done, all the meme coins, all the speculation, and we finally start seeing builders emerge out of that bear market with some really exciting narratives and applications. That's the key goal here. And maybe then, well in towards 2025, or whenever it may be, we can get an expansion on that liquidity ratio where people start paying a premium again, either because of new dollar liquidity coming in the market, driving up prices, or essentially people just getting more optimistic on digital assets again, with the Fed possibly providing a better environment to speculate on financial assets again. We got to know when it's time to get long and when it's time to steer clear and remain in cash. Now, this takes us back here on a closing remark. I just want to let you guys know I do want to close on talking about some of our price projections for Bitcoin. But if you guys like this kind of analysis here, one of the greatest ways you can continue to get more information on all these topics and the kind of analysis you've seen here today is through the Dash report. I'll leave a link down below in the description. We didn't have any sponsors in today's video. I mainly wanted to focus here on talking about what we've been researching within the Dash report over the past couple of years. We've been writing the Dash report since 2018. And inside this, you get a 360 analysis every month on crypto, stocks, commodities, and Forex, what we're watching for across all these markets. That's where we stand out big time versus the other channels. And once more, you'll get access towards our key momentum indicator here. The Lux Algo is a separate indicator suite, but you guys can also access that in the link down below in the description if you guys find it interesting. But you'll get our trade alerts. You'll get to join in the Telegram discussion group where you can meet with hundreds of other Dash Report members in our community. And on top of that, you'll get exclusive updates as well as mid-month webinars where you can ask me questions, all kinds of stuff within a package of our newsletter here on the channel. And it's a great way, even if you're just looking to support the channel and get some additional insights, that's a great way to do it as well. There's no better way outside of liking the videos here on the channel. It's a great way that allows me, no matter during bull and bear markets, to do what I do here on the channel. So I just ask that if you guys are interested, you can definitely try it on the monthly. You know, it's only about $30 per month, but you get a 20% discount if you sign up on an annual basis. So if you guys happen to enjoy it, perhaps try the monthly and then maybe the annual, but I digress. I don't want to push it too heavy, guys. Just want to let you guys know we've got a lot of people within the Dash Report community. And if you like the insights we share here on the channel, it may be a newsletter for you. But that's it for today's video. I rambled on a good amount. I want to go ahead here and close off though by talking about price. Again, to visualize here how things could start to play out. Let's go ahead the weekly time frame here. And I want to go ahead and emphasize that essentially, if we are not going to be able to hold through these 200-week moving averages, do not be surprised if we see some chop here for some time. But generally, overall weakness. If we start to break through there, this is when we start to move into the summer towards setting new lows here. Our target is for somewhere around $12,000, roughly in this range, depending on whether or not the Fed continues to move forward. If the Fed continues to contract liquidity, if they continue to knock down inflation and deal with it here and now, I think the Bitcoin isn't going to go too much further than those previous lows. It's just going to come down here towards around $12,000, $13,000, right? That would be a general range to look for here. However, if the Fed loses track, if the Fed starts to pivot, and rather than focusing on allowing some things to break in the economy and bringing equilibrium of supply and demand, cooling consumer confidence in the economy, if it doesn't come to that point and the Fed decides to play easy in the short term, while there may be some short-term relief in the market, while we may continue to hold up in this range of 20 to 30K, it will not be enough to support a new bull market. And once more, it's important to understand that if the Fed kicks the can down the road, I think we've got a chance for even lower levels than 12 to 13K. And we better hope that the Federal Reserve is not going to do that. As much as I would probably be able to buy in at lower prices, according to that thesis, I would much rather have a swift new set of bear market lows coming down to 12 to 13K, giving us, generally speaking, from the all-time highs, a little over an 80% correction, or an 82, 83%, completely in line with what we've seen in traditional bear markets. That would be perfect. Not too crazy, not too far off, not some doomsday prediction, pretty much in line with the typical crypto bear market. That would be great if Bitcoin held up that well in the macro environment we're currently in. That is definitely not supporting financial assets. Case in point. So I rambled on a good amount here, guys. If you enjoy my rambling, if you enjoy our thesis here for where we can see price heading here, the idea of a third lower level that's in line with the two previous lows, taking us down here towards around $12,000, then definitely consider dropping a like. And even if you disagree, giving a like for the video, guys, is a great way to show me that you enjoy this kind of content here. Maybe it's good to get a contraction or a contrarian opinion to yours. No matter where you guys stand on it, I really appreciate all that you guys do to allow me to create content here on this channel. It means so much. And just to have the community we have here in DataDash, as well as the Dash Report, some of the members we have here on this channel are just so great. It really feels like a family, and it's been amazing. We're coming up here on almost 6 years doing DataDash here. And I think you guys keep coming back because one of the big things we do is we don't just focus on crypto, we follow the whole picture. And when you start to follow the whole picture, well, it takes more time. It takes some due diligence and research. You're going to get an insight on the market that is going to outpace 95, 98% of investors. And that's all you got to do to come out on top. So that's enough for me, guys. I rambled on a good amount. Have a great rest of your day, and I'll see you all in the next video. Take care, everyone.